Hey John, back for another month. May's in the books, and we're now into summer. I guess another 2 weeks, and it'll officially be summer. But
Yeah.
certainly feeling like it outside, and real estate certainly feeling a little more comfortable from where it's been earlier this year. How did May shake out for you?
Not bad. I think I had four sales firm up, which was great. But I agree. It did feel a little bit more like a normal market, which was quite nice. By and large, I would say the entire spring market, if we kind of figure that, March to call it now window, still has never felt as busy as maybe we've been used to in past years. And I
For
think
sure.
some of our data will show that. But at the same time, we did see a healthy uptick, I think, month over month.
Yep.
Relatively speaking, and that was good to see.
Yeah, I mean, if I look back over the numbers, sorry, my screen's on that side. If I look back over the numbers, I mean, sales from last month across the board were fairly flat. Some town cities were up a little bit, a couple
Mhm.
percent. Some were down. Year over year, though, we were up, an average of
Yeah,
about 7% across the board. Some were up as high as 13, some were up only about 3, but we're about 7.6 is the average for the region, increase year over year. One of the things, though, when I'm looking at the numbers, and you probably noticed lately, we've been doing a lot of like some of the graphs we've added into our monthly statements or our monthly newsletters that go out on some of our neighborhoods and that. I've added in a lot longer picture, like a last 10-year picture of activity on number of sales and price, just to give people a little more visual perspective over where the market's been and where the market is. And honestly, if you bumped your head in 2020 and you got amnesia and you lost the last 6 years of your life, real estate, you'd think today's market was completely normal. And I think everything that's transpired over the last 6 years since the beginning of the pandemic has really changed the outlook or people's perception of what the real estate market is. There's been a
yeah.
lot of emphasis on it, and yeah, prices are higher than they've ever been. But if you took away the last 6 years of activity and you really looked at where we are today and slotted it in back there in February of 2020, we would look completely normal. You wouldn't think this was an obscure market. You'd think we were a completely normal real estate market. Pricing is fairly stable year over year right now, and activity is fairly stable. Up and down a little bit here and
Yeah.
there is not anything unusual, but we're back to kind of a stable market, and a lot of people
You're
aren't
not
seeing
seeing
that.
wild swings from
No,
month to month. Our months of inventory is actually in a reasonable range right now.
yeah, and people
And
aren't
interest rates
recognizing
as
that
well.
because they're still measuring against those peaks and valleys that we've experienced since really
Mhm.
since 2020.
Yeah, no, it's a great point you make. And we've talked about this before. A lot of it depends on when you bought,
Absolutely.
or even if you haven't, what your own situation looks like. Just using an example, if you bought in, I don't know, call it March of 2021, which was a little bit before the peak, you'd still be viewing today's prices as probably not where you want them. You want them to be higher because chances are you might have paid more. But if you
Yeah.
bought in like 2015 or 2018, even 2019 for that matter,
Or 1993.
or that, like you're looking at today's numbers as probably higher than if you went back in time to the point in which you purchased and made a forecast of what your house would be worth one day, you would have never guessed the number that it is today.
No, you wouldn't. And I
No.
mean, John, you and I have talked about some different examples over time. But if you took two neighbors on a street
Hmm.
and with two identical homes, two builder quality homes that were built with the same model, one person bought it in 2021 and one person bought it from the builder in 2002, and they both went on the market and they both sold for the exact same price in 2026. But the person who bought it in 2021 paid 130,000 more than they sold it for. They would think, oh my God, this is horrible. It's a terrible market. But the person who bought it in 2002, who paid a third of what they sold it for, would think, my God, I did great. I made money.
Yeah.
I didn't get what my neighbor down the street got 4 years ago. However, you probably have a completely different perception throughout that entire experience, negotiating, listing it, selling it, and when you get the deal done, your feeling will be completely different, even though you both came out with the same result.
Yeah. One
It
was
all
up
had
a
everything
million
to do with
bucks and
what you
one was
paid for
down
it
a
when you
hundred
bought it.
grand.
And that's the thing, right? I mean,
Yeah.
that's why we talk about the perception is actually, perception is in the eye of the beholder, I guess. And
Well, yeah, of course, being armed with data helps. I mean, we have the luxury of being able to quickly, pull up stats pretty much sliced and diced any way we want.
yeah,
And we can share that with anybody who wants that data. Of course, obviously we do. We send out a regular newsletter monthly to clients, and on a whim, anybody can reach out and find out pretty much whatever they want to know. But But there's still people out there who just look at the headlines. They look at or go off what their neighbor said or somebody at work said, and they're hearing misinformation.
Yeah.
Because to suggest that the market is really poor right now, I think is inaccurate.
No, I agree. I mean, we've had some negative conversations about the market over the last year, without a doubt.
Mhm.
And I don't like to sugarcoat anything and make it more than what it is or isn't. And I mean, this past month, the government finally dropped the R word, which,
Yeah,
I mean, I've been saying for 2 years we've been in a recession, and we finally had the word drop, even though they threw technical in front of it, just to.
right.
But when I look at the numbers, and again, it's not trying to justify anything; it's trying to be realistic, and it just supports the belief that you have to look at the market from your own perspective when you're ready to buy or sell. And unfortunately, some of these people that bought in 21 and 22 have to sell in this market, and it is not a good position to be in, and it's going to hurt.
Hmm.
But there's other people that have been in their home a long time. Their home is doing well. I don't think the pricing is going to skyrocket go up. We're going to see any shift in behavior and pricing over the next 3 to 5 years. I think there's a lot of economic downward pressure, and all the more reason I believe we're in a pretty decent market to be a seller today. Again, if you bought in 21, 22, you got a bit of an emotional hill to climb, but beyond that, it's not a bad market.
No, and really, we've talked about this many times, and I think many would agree that it comes down to when it's the right time for you, and for some folks it won't be right now, but for many it very well could be, and the market is healthier than I think the headlines and some of the negativity out there would suggest.
It's funny. I've had a couple of deals come together in the last 6, 8 weeks,
Hmm.
where I've had buyers and sellers. I've had clients that have been buyers and sellers, and I try to be very realistic, especially on their buy side, letting them understand what they're getting into and where we are. And listen, if you're going to sell your house in another 6 months or a year or 2 years, I can't guarantee you're going to come out on top. But in the long run, you should. And the market always, Canadian real estate's always been stable. But I found myself in a number of these different deals I've been working on where the clients are trying to reassure me when I tell them, listen, what that seller's asking is got a little bit of emotion attached to the price that you're going to pay for that, and the sellers are okay, the buyers are okay with it because they have a long-term plan. And I've always, almost got the clients reassuring me that it's okay, which is
Yeah.
I'm just trying to give them the best possible information. But it feels good to see your buyer going into a deal recognizing that it is a good time to buy, and I will do okay because I plan on being here for a while, and I'm confident in Canadian real estate, and it will
Hmm.
come back over time. So, and we sold for X and bought for X, so we're really not that bad off. We feel we made a good positive change. So,
Yeah. Well, and that's a good point. Buying and selling in the same market as close together as you possibly can, you minimize the chances of anything kind of going sideways or market shifts or changes
mhm.
that negatively impact one half of that. So you got the same conditions on both transactions, which is what you
Yeah.
want.
And I mean, for those that are getting out of the market, if you're waiting for it to improve, I'm still a firm believer that we're 3 to 5 years out from that shift. So, you know, calculate for yourself what does it cost me to stay here for the next 3 to 5 years versus if I get out and follow through on the plan that I have, what does that look like?
Hmm.
I mean, if you're getting out and putting your money in investments right now while you decide your future, maybe you're going to rent, move home, do whatever you're going to do. Man, the stock market's rocking right now. It's making money. It's up. Better than real estate is at the moment. So for those people, you
Yeah,
know,
but do you buy
treading
high?
water is not a same. Sorry.
But do you buy high?
Well,
Hard,
I mean,
hard to
it,
say,
it
right?
but it really depends on what they're getting out of the market for, right? I mean, not
Yeah.
everybody gets out of the market because they want to put their money in investments. I don't mean that, but if you've had a
Yeah.
change in your employment situation, if you had a change in your health, things like that that are causing you to do something different, um, interest rates are a big part of people's decisions today, right?
Yeah.
So again, you got to look at it at the end of the day. You're not making any money on your transaction, but if at the end of the day you can't pay your mortgage because it's now 30% higher,
Well,
right?
then you got to make a decision, obviously.
Well, that's the thing.
Yeah.
So everybody's situation is unique and different, and they need to look at it for what it is for them. But I guess my whole point in it all is that you need to look at how the market will respond to you, and is it
Mhm.
going to be ideal to your situation? And that's all it really comes down to in the end.
Yeah, I just the other day I was doing a walkthrough visit with a buyer, and after they left, I was still in my car, and a woman walked up. She was one of the neighbors, and asked a few questions about the market. And it was interesting that she had been in her place for quite a while. We're like 15 plus years, so well before the crazy peak of early 2000s and early 2020s. And yet she thought today's prices were were nowhere near where they should be. She wanted to see them back where they were in 2022. And I thought, I, I wasn't going to be able to educate her fully in the parking lot there at the
Yeah, yeah,
townhome development, but I thought that was an odd take on it, given that she in fact did have a lot of equity in her property. She wasn't upside down like if she bought in 2022, and so I thought that was there's a couple things she kind of said that hinted to me that she was relying on headlines and some of the social media stuff you see out there that was more
yep,
negative. And for some, perception's reality, right?
absolutely.
You're not going to be able to convert everybody in a quick conversation in a parking lot like that. But had she had more data, I think her view would have been different.
Well, Joe, one of the things that I found interesting, I did an exercise on another listing I dealt with, and just going back to relating to the cost of things. And if you think about 2022 versus 2026, land acquisition costs were higher, just land, I forget a house on it. Land
Yeah,
acquisition costs were higher in 2022 than they are in 2026.
right.
But also, building materials were higher in 21, 22 than they are in 2026, simply because the shortage of materials, we had that spike because of supply chain issues, and the building costs were actually 10 to 15% higher than they are today. So that price per square foot to build a home has actually come down from where it was 6 years ago. If you take those two numbers and you look at that and it follows the same trend today, it would cost less to build a house than it would have cost you 6 years ago to build a house,
Mm,
right? So there's so many factors in there to consider that change that people don't look at. Like look at your insurance build cost, replacement cost on your home today
yeah,
versus 6 years ago, right?
yeah.
And there's now, I mean, insurance never goes backwards, so that's probably a misleading.
No,
But
nor do your
but
property
still, if you
taxes.
look at what it costs to build a house, like think about what a two by four cost in 2021 versus what a two by four costs today versus what it costs in 2016,
Right.
right? The number one piece of material in building a home. So
Yeah.
all those things play into just what you said. Like people's perception becomes reality, and the problem is the perception's not built on facts. So
Well, one of the facts that is all but certain, I mentioned this earlier when started this video, was that seasonally we see a line go basically a little dip in the winter, spikes up in spring, pulls back a little bit for summer, secondary peak, if you will, in the fall before falling off again for winter. And that picture, if you can picture it, kind of a line with two little peaks in it plays out year after year, pretty much no matter how the market's performing. That's what the activity and that shows your seasonality
yeah.
in graphical form. And if my perception of that is accurate, I think that's exactly what we'll see the next couple months or so. We'll see
Well,
a
it's
summer
played out so
lull.
far.
Sorry.
It has played out that way so far.
What has, and it'll
The
continue. So we should see a
the
summer
peaks
lull,
the
and
peaks
then
might not be at the same height, and the valleys may not go to the same depth, but
yep.
it's following the same trend.
Same picture. And so, with that in mind, the next couple months, we should see a little bit of a pullback in activity before, seeing a bit of an uptick again when the kids are back
I
in
think
school.
as we get closer into the middle of July, maybe late July, we'll see that slow down. August tends to
Yeah.
be the second weakest month of the year,
Yes.
so we expect that through the month of August, and then once the kids are back to school, we expect to see a little bit of uptick. But
Yeah. By about mid-September, things
yeah,
are rolling again.
I know we
So,
forecasted that in the past, and it hasn't come to fruition. But let's see where it plays out this year.
well, maybe perception will be reality, and we'll uh, we'll talk about it again next month.
Sounds good, man. All right,
Until
man. It's always a
then.
pleasure. Great to share some numbers and stories, and look forward to catching up and sharing some more next month.
All right. Sounds good. Talk to you
All right,
soon.
bud. Cheers.